Welcome to the Captain's Blog. I'm Dave McDonough, president and founder of Flagship Wealth. On this blog, we try to take what's unnecessarily complicated on Wall Street and make it understandable to you on Main Street. Ended last week up 5% for the year. Again, I apologize for being the host who cried wolf, but it is simply the Magnificent Seven, the seven stocks that you've seen on this blog over the past 2 or 3 weeks that is driving the return. I'll tell you what else is driving the return. It's the FOMO. It's the fear of missing out crowd. Now remember, the Fed wants the news to be negative. Negative is positive to the Fed and vice versa. Well, we talked to you on this blog last week about the news coming out this week, inflation numbers, job numbers, geopolitical risk. Did those items get in the way of the positive trend in the stock market? Here's your week in review. So to answer that question for you, initially it did. What do I mean? Payrolls double expectations. That's good news. And again, repeat after me, good news is bad news for the Fed. Inflation came out well above expectations. Again, the rumor out there is that inflation is dropping and headlines are telling you the same. And in December, the Fed told you, geez, inflation is coming down so much, we may actually start cutting interest rates, making it less expensive for you and corporations to borrow. Well, something happened on the way to the rainbows and unicorns, folks. Inflation is still here. And you and I both know that when you go to the grocery store or the gas pump. Well, the government numbers came out this week and proved it. Well, the market had its worst day in over a year on the hotter than inflation news. That is simply a reminder, folks, that the market doesn't go up every day. But get this, by the end of the week, the market is now flat, recovered everything that it lost midweek. Here's another piece of good news, which is actually good news. The rally is broadening. It's going to other sectors of the market, leaving the Magnificent Seven on their own. And here's what to look for next week. We have a holiday shortened trading week. And yes, folks, we're celebrating presidents. On Monday, the market will be closed. Let's just celebrate Washington and Lincoln. But we will be paying attention to, again, folks, is the inflation numbers, job numbers. And I believe this, that the Fed governors are going to go out next week banging the table that rate cuts are not happening anytime soon. Now, remember, the market is priced in that the Fed is going to cut rates starting in March. That is no longer the case, in our opinion. We're looking at the summer to the fall. The market needs to reprice for that. So be proactive in your portfolios, folks. We're not talking about market timing. Yes, that is a game of whack-a-mole. But we are saying is it is a good time to rebalance. The market is giving you a gift and is priced to perfection. Again, rebalance. Look for value in this market. Do not chase, and consult your local financial advisor for more details. Here's your personal finance tip of the week. As I just mentioned, I believe that the market is priced to perfection and is giving you a gift. Specifically those out there that are complacent, that have assets in different sectors and different accounts, that don't know how one portfolio is doing versus another, what it's investing in. And it's easy, folks, to procrastinate, to put those statements away and just keep filing them because the market continues to hit all-time highs. I challenge you out there to look at those statements, check the beneficiaries, check how they're allocated, review your risk tolerance, review your time horizon, and make sure that those portfolios are going in that exact same direction. I bet the answer to that is no. If you need help with that, on reviewing those allocations, markets, risk tolerance, again, consult your local financial advisor for more details. Thanks again for checking in. We'll see you next week on the Captain's Blog.